Good afternoon, everybody, and welcome to this week's weekly analysis session for the USA. It's Tuesday, the 15th of March 2016. Let's get underway. First of all, our disclaimer: the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, or particular needs. So before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. Alright, so the agenda, we'll go through and have a look at the portfolio management for the time being, what's happened with our benchmark indices, obviously this session relating to the USA, and we'll also look at some specific setups. There were a few more setups rather than the previous week, so that's a promising sign. We won't be having any Q&A today, obviously, as this is a recorded session. Right, the benchmarking model, the S&P 1500, is now in moderate market risk. So that now means that in terms of risk management, it means that if you were allowing yourself a 15% maximum drawdown across your portfolio, you would now need to apply an 80% market risk multiplier to that. So that means you could actually have up to 12% value at risk across your portfolio. A number of trades are still holding up very well in the US. There are a number of trailed stops this week as well, so promising signs all around. Just a reminder, the macroeconomics analysis session for last Friday was on the Australian economy. Sat down with Jeff and we discussed the health of the economy, basically a health check if you like, so looking at a number of key indicators and what the prognosis was for the overall economy. And again, just a reminder for those of you who haven't caught up yet, Friday afternoon is the analysis session for the ASX, and Monday mornings Monday afternoons rather. It used to be Monday mornings. Monday afternoons is the US session. All right, let's go through and have a look at Beyond Chart. So, as always, we like to go and have a look at our benchmark index just to see what's going on with this market at the current time frame. So, what you'll see, obviously, over a period of time, we've been watching these lower peaks significantly along the way. We've now sort of moved back up into that sort of zone, if you like, just bordering on our longer term moving average there. We've certainly just passed these previous levels of previous points of demand, if you like, areas that were once support that gave way and then became resistance. We're just looking at this point to see how well they're going to hold up. And it looks like at the moment, the last couple of weeks, this market's been moving quite strongly upwards. So time will tell. We've got a few announcements and things coming out this week. The FOMC on Wednesday, just to see whether or not this market is due to pause. It's certainly had a big rebound, very much like this previous one. Back in sort of when was that? End of September time. Big move back up, similar sort of size move again, and we're probably due for a bit of a pause and a bit of reflection as to what's going to happen with this broader market. So I'll be interested to see what happens over the course of this next week. We've been talking about this move for a little while on the way up. Where was it likely to meet resistance, and what was likely to happen at those particular levels. So, but the good thing for the time being is that it's dragged our stochastic now up above the 60 level, which puts us into moderate risk. All right, so some new setups for this particular week. Now, this is one that is still yet to trigger. CVC, it was in last week's analysis session, so I won't spend too much time on this. It didn't quite get to our triggering level of 33.62. In terms of the price action, that last trough is at or above the second from last medium-term peak. So from the price action point of view, it certainly does fit the Orley criteria. And the other element that we needed to consider last week was whether or not this move up to this previous long-term peak was classified as a first test. And you might remember that a first test, it just needs to come within 1% of that level. And it had actually come within 1%. And so it ticked all the boxes, but it's yet to trigger at this point. So it's still in the watch list. New trades for this week. ATO, if we just zoom out and see where this stock's been, we're blue sky. The stock has never been this high before. So the reason it's come up on the scan, obviously our three trends are all in alignment. Really good relative strength, particularly of late. You know, if you go back over the last 6 to 8 weeks, this has been very, very strong indeed. So that's a positive sign as well. Price action, last trough that's just been created at or above the second from last medium-term peak. It's well clear of that, so again, showing quite considerable relative strength. At this stage, we just need to wait for the breakout, and that is 0.5% above our last medium-term peak. So we have an on-stop order here on ATO at $72.26, and a stop loss coming in at $67.08. Now that's at least 2 ATRs, must be a minimum of 2 ATRs below that entry level, and it must be at least 0.5% below that last medium-term trough. That's ATO. Next stock, NEE, Nextra Energy. This is a stock that for a considerable period of time has really just sort of floated sideways, and you'll see, you know, a little bit like a piano keyboard, isn't it? A few, you know, a good mixture of black and white candles, etc. But more recently, starting to get, you know, certainly a much more directional bias towards the upside. And just recently putting in a new medium-term trough. Now that trough is well clear of the second from last medium-term peak. That's the last one. That's the second from last. So it's well above that level. We just, again, need to wait for the breakout. And again, just zooming out just to see where we are. We're at all-time highs. So again, showing, you know, good longer-term relative strength. And again, you're seeing that on all three time frames that it's been outperforming the benchmark as well. So the structure of this particular trade, an on-stop order coming in at $117.56. That's 0.5% above that last medium-term peak there. The high there, $116.98. Protective stop coming in at $108.79, and that's at least 2 ATRs below that entry, and it's also at least 0.5% below that last medium-term trough. So giving it a nice amount of room to do what it needs to do. That's NEE. Next one, New Jersey Resources Corporation, NJR. Let's just zoom out and see where this stock is. Interesting that those last few stocks we've looked at, quite similar really, aren't they, in terms of longer term movement. Certainly continuing to move progressively upwards, which is a good sign. The last week's candle, not an overly bullish candle there by any stretch of the imagination, but it has put in a higher high and a higher low. So at the same time, now forming that new medium-term trough there, and that trough is well clear of that second from last medium-term peak. So price action is very, very good. Our relative strength. So we're ticking all the boxes. We're approaching all-time highs. We just need to wait to clear our last medium-term peak. That medium-term peak there is at 36.57, 0.5% above that level. Has our on-stop order at 36.75. Our protective stop loss is coming in at $33.15, and again that's at least 2 ATRs below that level. And if I just right-click and put on the value line and move that to the very last candle there, and you'll see that the little red line here down the bottom, that's the 2 ATRs, and the blue line is the 1 ATRs. So that's where I'm reading the ATR line from. So 2 ATRs is $3.22. So I'll just take that off the chart. So $3.22 below that level. Our protective stop must be at least that far below, but it also must be at least 0.5% below that last medium-term trough. So that's NJR. Next stock, NNN, National Retail Properties. Again, let's just zoom out and see where we've been. All-time highs again. Been very, very strong, this stock. Certainly it goes for runs, comes back, consolidates, goes for a run again, similar sort of thing. So with a little bit of luck, this looks like it's starting to move up again. Nice strong movement upwards. Nice shallow retracement. Last week's candle, nice strong candle last week. putting in a higher high and a higher low, and at the same time creating this new medium-term trough. That trough well clear of the second from last medium-term peak, so exhibiting very strong price action. Clearing this previous long-term peak very nicely over the last couple of weeks, and now that old major point of supply is now starting to act more like a point of demand zone, if you like. So all we need to do is pass this last medium-term peak, so our on-stop order comes in at $46.37. That's 0.5% above that high of 46.14. So on stop at 46.37. Stop loss is coming in at $42.77. That's at least 2 ATRs below our entry point and at least 0.5% below that last medium term trough. That trough low there at 42.99 you can see. So 0.5% below that has that stop loss coming in at 42.77. ResMed, another stock that also trades on the Australian market, and you'll see quite clearly on here that we've got a long-term peak that I just wanted to draw everyone's attention to. Other than that, it's been of late been moving fairly strongly. It did certainly have obviously a fairly strong downward moving trend through the middle part of last year in particular, but since then has just started to regain its relative strength over the 3 time frames. The moving averages have now just ticked over into the right order, so you'll see there that the red is above the blue and the blue is above the green. So that's why it's been picked up on the scan. In terms of the price action, we need to think about that. Well, where is that last trough in relation to the second from last medium-term peak? Well, there's a medium-term peak, there's another one, and it's well clear of it. The other aspect we need to think about on this setup as well is that we do have, at this particular level, we do have a long-term peak. So we need to make sure that that long-term peak, that we've had a test of it. So I've just put the value line on there just as an example. And the high there is $60.35. There, $60.11. So the long-term peak is at $60.35. So we need to make sure that we have come within 1% of that particular level. Excuse me. And the highest point that we got to there was $60. So is that $60 within 1%, excuse me, of $60.35? It is. So this is our first test. So that satisfies our testing of the long-term peak. So I'll take that off. The other element of this is that we need to think about is this previous long-term peak as well. Now, when we're thinking about those long-term peaks and we're using those as a target, if you were to be exiting your trade at that long-term peak, then ideally you'd be looking to take your profits at 1% below that level. Okay, now if you're to do that, then the scaling out, if you were looking to take off some of your trade, you would do at $71.81. Okay, so that's at least that's 1% below that particular level. That all-time high there, that long-term peak, that high was at $75.33. So if we take 1% off that particular number, it actually comes out at $71.81, right on the knocker. And that gives us exactly from our entry point down below here at $60.79, and with a protective stop at $55.28, it gives us a minimum of 2 to 1. Okay, so that's a trade that certainly you can take because it has a minimum of 2 to 1, even though it's exactly 2 to 1, but certainly you're wanting to look for at least that as a minimum upside target. All right, so that's ResMed, and I think there's one more in here, which is Scanner Corporation, SCG, not the Sydney Cricket Ground. Now, if we just zoom out and have a bit of a look about where we've been, we're at all-time highs again. which is a positive sign. So thinking about all the drama that the market's been through over the last several months, certainly really been on a move north, which is again a very positive sign, and as a result, very good relative strength. In terms of price action, last week's candle, higher high, higher low, and as a result, forming a new medium-term trough, and that trough is well clear of that second from last medium-term peak, so the price action filter there getting ticks on that basis. Our three trends are all up in the right order and moving, or that is diverging further apart, again showing a sign of strength. Now that last candle has already moved just marginally beyond that last medium-term peak. That's still okay. All we want to do is just make sure that we're setting our on-stop order 0.5% above that last candle. Okay, so it's still got some work to do before triggering us in, because at the top of each one of these candles, the extremities, wherever we've got a little bit of a wick, there is just a small point of supply. So we just want to make sure that we're getting into that trade beyond that level. So to do that, we need to place an on-stop order at $67.92 and a protective stop at $62.53. That's on SCG. So they were the main setups this week that came through on the US market. In the open trades on the watch list, one trade that triggered from last week was SYY, Cisco Corporation. You'll see the candle last week, a nice strong white candle, triggering us into that particular trade. Hasn't quite yet done enough to bring our 3 ATR protective stop up. So for the time being, we will still defer to our 2 ATR based stop, that's the red line there, until such a point that it's strong enough to drag that trailing 3 ATR up beyond our initial stop, and then we'll use that to continue to trail it. So that was the one that triggered from last week. There are some trailed stops that I'd like to go through. AWK, American Water. Again, last week's candle just closing marginally higher than the previous week and just eking up just a little bit further that protective stop. So that's trailing 3 ATR is now up at 60.24. A couple of others. FISV. We'll go through and have a look at that stock. Just recently, you'll see that last week's candle, they're just marginally higher than the previous week and the week before that, and just trailing that protective stop up a few cents, but again, it's still reducing value at risk, so worth doing along the way. Kimberly-Clark, we talked about this one last week, saying how nicely it was moving, a lot of white candles, typically a fairly defensive sort of stock, and last week just noting that we'd had this short-term downtrend, and if we had a higher high and a higher low this week, that would be certainly a very good sign for it. It's not quite another setup, and that's only because the price action filter would invalidate this one. This last trough, is it at or above that second from last peak? No, it's not. It's below it, but it's still moving along nicely. And the good thing about this is that we've just got this series of rising troughs along the way. And last week's candle, a high that it closed out, which was higher than the previous week, and just dragging that 3 ATR line, our trailing stop, up a little bit higher again as well. So that's again a good sign. TSN, it's been performing very, very strongly, and since breaking out has just continued to move onwards and upwards really, really strongly. So from initial entries quite a time ago, I think this stock, I'll have to have a look at that, because on there that shouldn't say 80.41 on that particular level there. We've got 54.69 there, so I'm not too sure why that's written there as 80.41. I'll change that while I'm thinking of it. 54.69. So there we go. So that trade's put on quite a lot since triggering a number of weeks ago. So not quite at 2-to-1 there, but getting very, very close to it. Last week's candle, really beautiful candle, and as a result dragging that trailing 3 ATR up higher and higher. So whilst I've just made that slight change to that analysis there, I will go and save that so that next week when I'm going through that, that's not still on there. The other trailed stops, TWC, just a very small adjustment to TWC. You'll just see those the last month for this stock has actually been quite good. It's been very disappointing through all of this time. So anyone who's had this stock, since the middle of last year has really had to wait since triggering in, and the things just really continue to go sideways. It looks like it's starting to turn up now. Interesting though that whilst going sideways, it still managed for a large part of that time to outperform the broader market and is now starting to move in an upwards direction, and as a result just trailing that 3 ATR up slightly as well. That was TWC. WTR excuse me, triggering in a few weeks ago, having a little bit of a retracement there. This old point of supply is now starting to act as a zone of demand, so that's a positive sign for WTR. And just last week, that candle just closing, that's the highest close that it's had for several weeks, and as a result that trailing 3 ATR is now at 28.22. Our initial 2 ATR based stop came in at 28.20, so now at 28.22, obviously higher than 28.20, so we now defer to our trailing 3 ATR stop. So that's got lots of room to move. SWHC, Smith & Wesson. There we go. It took a little while. This the first time that this appeared in the watch list was on this particular candle there, so way back in January. And since then, despite January's weakness, this has continued to move up further and further and further. So a pretty good sign for this stock. A lot of nice white candles through there, breaking out the previous week. Last week giving us another higher close, and as a result dragging the 3 ATR upwards as well. Now there was one stop out during the course of the week on OA, Orbital ATK, and you'll see here that this stock, from the very first time it triggered in, it really didn't get too far before starting to exhibit, I guess more negative sort of price action in that we've lower peaks, lower troughs. Looked like it was trying to do its best to hang on by virtue of some tails on these candles, long tail on this previous candle, so we were sort of keeping our fingers crossed there that it wouldn't close below its initial 2 ATR based stop. Remember the 3 ATR hadn't been dragged up above that level, so we continue to defer to our 2 ATR based stop. It did close below it last week, so that's a market exit on OA. Well, that's about it for this particular week in the US. I noticed that we've gone 23 minutes, so managing to get through a number of new trades, the trailed stops, and any changes to the watch list. All right, don't forget, if you've got any questions or anything like that, certainly feel free to request a coaching call. We've had a few people requesting calls of late, so again, that's always good to stay in touch. So let us know how you're going with your trading, and certainly don't be a stranger. All right, best of luck with your trading this week, and we'll talk to you at the end of the week for the recap on the Australian market. Bye for now.